One of the main reasons most people lose in the trading world is the lack of a clear and documented strategy. For this reason, today I want to teach you a strategy that will not only be extremely useful for professional traders but also for beginners, and I aim to resolve this major issue of not having a strategy once and for all. So stay with me until the end of this video, as I'll share a golden tip at the end that will help you achieve consistent profits faster. Nowadays, there are many trading styles in the trading world, each with its own rules and filters. However, one thing is almost common across all styles: support and resistance levels. Everyone knows these levels are very important, but can everyone, especially beginner traders, correctly identify these zones? Can they accurately mark these levels on the chart? Can they even trade based on these levels? Undoubtedly, identifying levels that the price respects and reacts to is challenging, especially at the start of your trading journey. But today, I want to solve this big problem for you by teaching you an indicator that can easily and quickly identify and mark these zones for you. This indicator will make your job much easier. If you're ready to learn this awesome indicator and its amazing strategy, hit the like button and let's get into it. We'll go to the TradingView website, navigate to the Indicators section, and select the Support and Resistance MTF indicator.as. You can see this indicator identifies and marks support and resistance zones for us. Now enter the indicator settings. We don't change the numbers, but proceed with the default settings. We only scroll down to uncheck the Show Breaks and Show Retests options because we only work with the support and resistance zones. These two options merely indicate where a level is broken or where a pullback occurs. One interesting feature of this indicator is that it marks significant support and resistance zones on your chart according to the time frame you are using. But the important question is, which time frame should we use to mark these zones? If you're an experienced trader and have chosen your preferred time frame, you should use the indicator on that time frame. However, if you are a beginner or don't know which time frame to work with, let me guide you. Choosing a time frame is much more critical than you may have heard because it directly relates to a trader's psychology. For instance, if you're impatient and like to see the results of your trades as quickly as possible, you should lean toward lower time frames. But if you're a patient person, can stay calm, and don't rush, you can work on higher time frames to identify more optimal points. Similarly, if you have a job and cannot spend much time analyzing charts, higher time frames are suitable because you don't need to constantly monitor the market, making them ideal for those with limited free time. My recommendation, especially for this indicator, is to use the daily time frame. Why the daily? Because in the daily time frame, the support and resistance levels drawn are much more reliable than those in lower time frames. For example, if you identify a support level on the daily time frame and another on the 5-minute time frame, which one do you think is more reliable and likely to cause a price reaction? Naturally, the support level on the daily time frame is more reliable, as many traders monitor this time frame, resulting in a significant number of orders being placed at this level, leading to price reactions. Personally, I use the daily time frame with this indicator. However, if you prefer to work in lower time frames or are interested in scalping, be patient because I have a good solution for you too. Step 1. After running the indicator on the daily time frame, the support and resistance levels are marked in green and red. As you can see, in some areas, the indicator draws two lines close to each other, indicating that both zones are important to us. Here, we see that the indicator has marked a red resistance level. We identify this level and wait for the price to reach it on the daily time frame. Note that we wait for the price to reach our level on the daily time frame. Step 2. Once the price reaches this level, switch to the 30-minute time frame. In this time frame, draw the last trend line you can see for the price. In uptrends, connect the lows, and in downtrends, connect the highs to draw the trend line. Now, wait for the price to break this trend line with a strong candlestick. At this point, you're ready to enter a position. When you want to enter a position after the trend line is broken, you have two choices. Enter the position immediately on the close of the strong candlestick breaking the trend line and take your profit. Wait for the price to return and retest the broken area, known as the break-even zone. I'll explain this in detail in future videos, so make sure to subscribe to the channel to avoid missing these valuable lessons. Upon the price's return to this zone, you can enter the position and take your profit. Here, I will enter the position as soon as the trend line is broken. Place the stop loss above the previous high, and for the target, set it at 1.5 to 2 times the stop loss. However, in some cases, you should set the target at 1:1, which I'll explain later. You'll see how beautifully the target is reached. Let's look at another example. Here, we see that the indicator has marked 2 red resistance lines as a resistance zone. We consider the entire zone and wait for the price to hit it on the daily time frame. Once the price reaches the zone, switch to the 30-minute time frame. As you can see, after reaching the zone, the price forms a steep channel upward. Draw the last visible trend line and wait for a breakout. Here, I enter a sell position after the price retests the breakout area. Place the stop loss above the previous high. As you can see, the target is beautifully reached. But remember, no strategy in the world has a 100% win rate. That's exactly why we always use stop losses. The indicator marks a resistance level. We wait for the price to reach it and switch to the 30-minute time frame to draw the last trend line. Enter the position when the trend line breaks, place the stop loss above the previous high, and set your target. The price initially moves toward the target and even reaches the 1:1 target. However, it reverses and hits the stop loss. We took a stop loss, and that's okay. But if you don't learn from your losses, you'll keep repeating them. Hence, we must analyze the reason for the stop loss. In this case, we should have taken a 1:1 target. But why? Notice that after breaking our resistance level, the price retested it, turning it into a support level. Therefore, the maximum target we could aim for was 1:1. Expecting a higher target would result in a stop loss. However, the important thing is that we understood the reason for the stop loss. Now you fully understand why I emphasized higher time frames. As you saw, since the indicator support and resistance levels were drawn on the daily time frame, they performed effectively, and the price reacted well to them. So, if you want to start your trading journey professionally, my suggestion is to begin with higher time frames. This will help you become familiar with market behavior and increase your mastery of your chart and strategy. Once you improve your skills and master your strategy, you can gradually explore lower time frames, provided they align with your personality and you enjoy scalping. Otherwise, continue working with the time frame you feel most comfortable with. The golden tip for those who stayed with us until the end of the video. If you want to achieve consistent profits in trading faster, you must focus. What does this mean? In the early stages of trading, choose one specific asset and focus solely on that. For example, only monitor euro to US dollar. Study its behavior, movements, and patterns. The secret of all successful traders is that they focus on a specific asset, especially in the early stages, until they master it. After some time, you'll be able to understand its movements even on a blank chart. I know this might seem illogical at first. You might think, why only one asset? Won't this reduce my profits? I should monitor 10 assets and trade all of them. If the first doesn't give an entry, I'll check the second, then the third, and so on. But I promise you, one of the main reasons 90% of people lose in this market is this mindset. As long as you think like 90% of the people, you'll get the same results as them. If you enjoyed this video, don't forget to subscribe to the channel. I'll teach you things here that you won't find anywhere else. See you soon.